Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Tuesday, October the 30th, 2018. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market. Then we drill down to our trade levels, our targets, and our hypotheses. Our hypotheses are our trade plan. We do create multiple trade plans. We do not know what the market's going to do. Therefore, we create different scenarios or plans based on who takes control of the market. Then we wait for the market to open up, see who takes control, and then execute the plan that best suits the market, and then adjust the plan accordingly based on the context. And yesterday was a very good example of that. But before we get into that, please read the disclaimer. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here in the go-to, and then we do live trading and analysis during the course of the regular trading hours. All right, so let's take a look at yesterday. Well, yesterday was incredible. 104-point range. Now, the interesting thing is the expansion was bigger, but multiple plans played out. We actually saw Hypo 1 play out, we saw Hypo 2 play out, and then we shifted to Hypo 4 and the liquidation and a break lower. So our main plan was an open auction just out of range or just in range, a move down. We were looking for a little bit of a deeper move into the prior day range, but we were looking for buyers to step in and then rotate us up, and our target was that 775 target above, and basically that was our primary target for Hypo 1, and we got up to 7. We didn't quite get up into the 778. But Hypo 2 was a open auction, a break above 2,700 and somewhere between 2,700 and 2,711. Sellers to step in and rotate us down, okay, targeting the main target down here at 2680.75 and a push through down into the overnight low and the naked VPOC and the gap close. That was Hypo 2. Then we go sideways, and then the sellers step in. They failed to get back above the IB, to get back above the mid and the VWAP. We rotate down, and we just continue to fall, get down to our key support at the, get below our key line in the sand at 44. That brings in Hypo 4. Hypo 4 has a target at 27 and a quarter with a possible probe to 2610, the key support, and we actually go through that a bit to 2603, and then we get a 41.5 point rotation up into the close, and we close just below or just right at the key line in the sand. Our actual close was 43, and our key line in the sand was 44 and a quarter. Very interesting, very big day yesterday, big sell-off, but again, this has found some buyers for the time being, but hasn't found enough buyers to continue the auction up. And I'm going to talk about this in a couple minutes, but let's just circle around and get some other stuff out of the way. Taking a look at the calendar today for earnings, we've got Redbook in 4 minutes. We've got HPI in 9 minutes. And really, those aren't very big in terms of news. The big news is going to be CB consumer confidence that comes up at 10 o'clock. And then 10:30, we've got Dallas Fed Services revenue, Texas Services sector outlook. And then 11:30, we've got the 4-week and 8-week bill auction. We've got Bank of Canada Governor Pelosi speaking at 3:30. And then at 4:30, we've got the API weekly crude oil. So really not a lot of news, but this is being driven again. The big news that came out yesterday on this the big whoops wrong that's on the big sell-off was there was an announcement that you know there's another $250 billion in tariffs that the U.S. is threatening to throw at China again if their talks fail with the Prime Minister of China. We do have a current zipper measured move right now. It's got a target right now out to 48 and a quarter. So just keep that in mind as we move through this session. Going to the earnings, we do have big earnings again today, and again for the most part, they're pretty good. General Electric was a slight miss, but GE's been in the doghouse for a while now. MasterCard, Under Armour, Coca-Cola, Pfizer, BP. There's more down. Cognizant, Sony, Atna, Fiat, Under Armour. I mean, just a ton of earnings, and for the most part, not bad. Aftermarket, we've got some big names again. We've got PayPal, I believe. No, Facebook, Baidu, IQ, eBay, Amgen. Those will be the big ones. I'm not seeing anything other that's really big market mover here, but a lot of earnings coming in after the market again. But right now, earnings isn't the story in terms of this market. It's the China and the headline news and the fact that we just made a big move. Now, let's take a look at the macro quickly, and then I want to go to the structure because it's the structure I really want to take a look at. Where's my macro? There's my macro. Each day I start with a simple candlestick chart. I use a 9 EMA, 20 SMA, and what I'm looking for is I'm looking for where we are in terms of the trend and the periodicity. And do we have a strong trend? Do we have good slope and separation? Is price paralleling the 9 nicely? This is a good example right here. There's 14 months of one time framing up, and then we violate the one time framing, come down, and we challenge the trend, but we don't violate it, and then we look like we're getting this continuation pattern, and then this happens right here, and we get a 341 and 3/4 point move down. But we come down and we test just below the 20 SMA, and right now we're holding. So we have tested and tried to violate the trend, but we haven't broken it yet. But we are testing the trend in the bigger time frame. Going to the weekly, you can see on the weekly, now we're seeing the strength of the trend. Okay, we're getting slope and separation to the downside. And what I'm really looking at is I'm looking at this earlier move in February, which was our largest month, and this was 100. We had a couple 100-point plus days. October, I'm sorry, in March and April. The low on this, though, is what you want to pay attention to, and that's down at the 25.4275. So we still have room to move lower, okay, based on this change of trend down into the 25.50, 25.75 area where true support came in last time. So this is a big move down, and it wouldn't surprise that we get a counter rotation. I'm pretty sure that we've got a good probability that we're going to have an inside day today, considering that the range was 104 points, and we're currently basically almost right back in the middle of that. But I do think that we'll have an inside day, and the likelihood is it's a toss-up between whether we get a rotational day with a slight upside bias or we get a rotational day with a downside bias. Going to the daily, so the trend is, definitely accelerating on the weekly to the downside. And then the best picture is on the daily. You can see that, we've got great slope and separation to the downside. Every time we come back to the 9, we fail the 9, and this has got room to move down lower. If you look this on the daily, you can see that we came in, but, we came into this level right here. You had a touch here, a touch here, a touch here, a touch here, but we've got some extension down, so it wouldn't surprise me if we get a little bit further move. I don't think you're going to see a whole ton of risk on today to buy this dip. I think that that coming into the end of the month, that there's going to be some trepidation in terms of funds buying into this right now. I think they're going to be risk off probably into the end of the month now. Going to the intraday, going to the 4-hour, you can see again that this is a pretty solid trend down. We tried to rally the other day, but yesterday was a big failure. And then we did get a FUBAR Mr. Sneaky, and they closed the tech gap, but they failed the tech gap. And this is a good example too, by the way, a couple of them. Here's a FUBAR Mr. Sneaky right here with the technical gap, and they closed the gap. And a lot of people ask me why I designed the trade to have the primary target with the touch of the 9, when a lot of times it will continue up. Well, a lot of times it doesn't. A lot of times it closes the gap like it did here and then starts to sell off again. So that's why the primary target now, if you're running multiples, you always want to keep a runner, because a lot of times you will get a change of trend on a FUBAR Mr. Sneaky. In fact, let's just go take a look at the trade of the day yesterday, and I'll be honest, I got short on this trade and I did not hold. But if you look at yesterday's session, we had a open auction just in range. They came down. They bought a little bit higher than I thought. I thought we'd come down into that 84 to 80 area, but then they buy up, and you get this 20-point impulse up. But then we get this Mr. Sneaky, this FUBAR Mr. Sneaky, and I got short on this. And if you would have got short on this, you basically could have held this the whole day for a 100-point move. Now, how many people are going to be thinking that that's the case? But I was thinking, because of the impulse up, I took the Mr. Sneaky short, but I was really looking for a bounce off of the mid and VWAP for a continuation, and based on this strong impulse up, and what we got was just chop at the high of the prior day, and then we broke inside, and then on the next test, this was the second FUBAR Mr. Sneaky that you could have taken, and and took this short, and had a nice run there. And then we had another one right here, gave you a 14.25 point rotation up. So just pay attention to that simple candlestick pattern and understand what it's telling you, and being able to trade off of it will give you a good trade that's got a positive expectancy, and that you can use over and over and over again. And it also works on other instruments as well. You just have to find the right periodicity. I got away from what I was talking about. So taking a look at the structure, that's what I wanted to do. So you can see, we talked about the fact that yesterday we were coming down, and we were in this distribution zone that goes from 2750 up to 93, that has multiple points of undetermined fair value. I think that we're likely going to get stuck in this area and mature this area. And that's why I'm looking for a balancing day today. Key line in the sand is going to be the 2610. The over underline for me is going to be the 2750. It was the 50 here. 2750 I think is going to be over under. I think if we hold above 2750, then we chop and get a upward bias towards the 2-day balance. The 2-day balance is at 59.60 area, and that puts us inside. If we get above the 56.75, puts us inside of the value area of the microcomposite for the 5 days. And I don't know if we can rally all the way back up into balance, but the balance is still above at the 2702.75. But we are back in this distribution zone down here, and you can see we spent some time here, but we really don't have clear defined value, okay, in this area. We have multiple undetermined fair value. So levels to pay attention to, obviously 2750, 2710 still is very important, because below 2710, that puts us down below the value area low of the larger time frame microcomposite. This is the microcomposite that goes from this gap up day, all the way back here, in September of last year, and the value area high, which is all the way up in the 2860 area. So if we break below that, then it's a possibility we get that extension down into the mid 2500s, and if we don't bounce there again, we could see this. And the next big destination below is all the way down here in the lower 2500s. Above us, we want to pay attention to that 50 level for a move back up. It's now shifted slightly lower to 49, but for a move back up into the 60, and then chopping in this area. And then, of course, we've got to pay attention. Key line in the sand above is going to be that 93.25 again. And if we get above that, a move back up to test the 2700s as a possibility. So, overnight inventory. Overnight inventory is, pretty much net long. I'd say it's about 70% to 80% net long. We are seeing a bit of a sell-off. We did get the VPOC shifting up into the 2655. Remember, 56 area is the value area. 56 is the value area on the shorter time frame microcomposite, and a move back up into the 2-day balance up at the 2660 area. So let's take a look and start moving our numbers over. Overnight low, I've already got in at 36.25. Overnight high, I already got in at 64.25. We are coming down towards the overnight low. 41.75 is the key target right now below us. We're going to be, if we open in this area, we're going to be opening up in the lower distribution from yesterday, and below the prior day close, which is at 43. Settlement was 43.50. The full session 20 period average true range is running at 55.84. That's almost double. In fact, that is double of what we. Look at that. We got our zipper measured move target, and we put in another zipper measured move. Let me just check this for a second. We just hit the second target too. So we're seeing a bit of a meltdown right now in the ES. Probably good for a little bit of a bounce down here in the 40 level. for rotation back up into the 44 area. But let's get on with this. We're not trading, we're discussing levels. The average true range is huge. So our daily upside ATR target off of the overnight low is up here at 92.25, right near that key line in the sand above. And again, this becomes our key line in the sand, the 92.75, 93. And it's also got our overnight high there, and I'll bring that back up in a minute. And then based on the overnight high of 64.25, our downside daily ATR target is at 26.08.25, just below our key line in the sand, which is going to be that 26.1075. And then our over underline becomes the 27.25. Now, what is the difference between an over underline and a key line in the sand? Key lines in the sand shifts me into a wider hypothesis. Usually shifts me into hypo 3 or hypo 4 if we break above or below the key line in the sand. Key support, which is down here at the 2560 area. This tells me that we're probably in for a much bigger move, and it's pretty low today down there. I think that we're likely going to chop either in this lower distribution or in this middle distribution here during the course of the RTH session. Value means nothing yesterday. There was no value. You have multiple distributions, fairly decent structure with the LVNs. Pay very close attention to the 1, 2, 3, 4 main LVNs. They're going to be clues, and you can trade off of them. In terms of hypotheses, let's talk about that. Oh, we got to put the overnight VPOC in. The overnight VPOC could shift, but I doubt it's going to. 55.25. Okay, so what are we looking for? The hypothesis. Hypo 1 and Hypo 2 going to be equally weighted. Both are going to be balanced, but and both of them are going to be inside day. It's just, do we make the move down first and then rotate up, or make the move up and then rotate down? So in terms of hypothesis, because we do have a strong buying reaction off of this this low, my main hypothesis is going to be a slight bias to the upside, but equally weighted. So I'm looking for an open auction in range. I'm looking for a move down to test the 27.25. I'm looking for buyers to step in between the 36 and the 27, and I'm looking for rotating us back up. And the target is going to be up here in the 2660 area, and then basically just chopping and filling in and closing somewhere around the 2660, 2650 to 2655 to 2660 areas where I'm looking for a close. Hypo 2 equally weighted, open auction in range, a push up into the 60 area, 60 to 65 area, and then I'm looking for sellers to step in, rotate us down, and basically come down, and I'm targeting a test of the 27.25. Buyers step in, and we chop, and we close somewhere in around where we closed yesterday, in around the 40 to 44, 45 area. That is Hypo 2. Hypo 3 is a continuation, a open test drive, failure to take out the overnight high, sellers step in early, rotate us down into the 27.25, chop here, and then fail, come down to the 2610, fail, and then break lower and come down. And I'm targeting this 25.9375 as my target for hypo 3. And then I'm expecting chop and then a move up and a close back in the 2600s, but first test down into the 2500s with a target of 93.75. Hypo 4 is a take back day and a move back up towards the 92. Open test drive, fail to take out the overnight low or just take it out quickly and then find buyers and rotate us up through the 60 area, chop in this this area up here in the overnight high and then push higher, and the target is 79.25 with a possible late day probe up into the 2692 area. But the key target for hypo 4 is up here at the 79.25. So those are my 4 main hypotheses. The 5th hypothesis, which is less likely because of the average true range, would be a inside day with a 20-point range, chopping between the 27 and the 55 area, and basically just chopping in this area as we fill in this profile and fill in this distribution zone that we're talking about right here, and start filling this area in, basically around this 42 up to the 60 area, but basically just chopping between the 27 and the 57 area. So those are my main hypotheses. Going and looking at gold quickly. Gold did not hold, and it broke through, and it came down into that 23 level on the move. Gold is not a risk off scenario right now. You would have thought that we would have been stronger on that move down in the indices, that more money would have flown into the metals and to gold specifically, but it's just not seeing it. It's moving with the markets, and we moved down and tested this the CHVN and bounced, and we're back above the 25. Again, nothing really changes. We're in this balance. Balance is in around the 31 area, 31 area. And if we hold the 25, I'm looking for a move back up into this area. If we break the 25 again, I doubt that the 23 is going to hold this time, and we're likely going to push through into the 17. If we can stay above, I'm looking for a move back up and a possible move up into 36. But again, just solidly in this balance, and we're flagging, and we're waiting for the next breakout, and we don't know which direction that's going to be yet. Anyway, that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.